Can Adyen beat PayPal and become the biggest online payment platform? And if so, can we make a lot of money by investing in it now when it is just getting started? Well, let's find out. Adyen operates payments platforms in Europe, Middle East, Africa, North America, Asia Pacific, and Latin America. They provide services to such companies as eBay, Netflix, Meta, Microsoft, and Spotify. They are currently the 15th largest payment platform in the world. What it means is that they control only 0.33% of the market, while PayPal has over 40% market share. So they are still small, but they have exceptional growth. PayPal's revenue is growing very nicely at 17%, but Adyen's revenue is growing 50% per year since the IPO. So it is basically a fight between David and Goliath. But maybe investing in Adyen so early can actually be a great long-term investment because they have a much bigger growth potential. If you were to invest $1,000 into Adyen at its IPO in June 2018, today the shares would be worth around $2,510. So that is a gain of 151% in about 4 years. But of course, future results don't have to be anything like the past. So let's analyze Adyen, value it, and see, can it really beat PayPal? Individual insiders, that is a check. 4.7% of the company is owned by individual insiders. And we would like to see this number over 2%, so that is very good. We know that the management has its skin in the game. And are individual insiders buying? That is an X. In the last year, individual insiders sold shares worth around $25 million and bought shares worth around $20,000. So quite a significant difference. And do super investors own this company? That is an X. We don't see any super investors owning Adyen. So of course that means that they are also not buying the stock. Return on invested capital, that is a check at 24.3%. And we want to see this number higher than 10%. So such return is very nice indeed. And what about free cash flow growth? That is a check at 48% annual growth rate since the IPO. And also here, we want to see this number over 10%. So free cash flow growth is absolutely exceptional. And what do we know about net profit margin? It is an X at 9.6%, and the industry average is 14.7%. And here we get to the first real problem for Adyen. When they reported the half-year results a few months ago, we saw that the growth was slowing down, but also that their margins went down mainly because of hiring costs. CEO Peter van der Daas acknowledged that competitors in the US had won businesses by lowering prices. And he continued by saying that it did not make sense for Adyen to engage in a price war with them. Well, it does not make sense because they have lower margins, so they don't have the pricing power. They would just lose such war. So they can't be cheaper, they have to be better. And now let's take a look at share buyback. It is an X with 1.5% of new shares issued since the IPO. Now, such dilution is rather small, so we probably don't have to worry about it too much. And a company that is growing so fast needs money to invest and not necessarily to buy back stock. So this is probably a wise decision considering where they are in their journey. And let's take a look at the debt. It is a check. Adyen basically has no debt at all. And that is very encouraging because, as we know, it is really hard to go bankrupt without any debt. Adyen does not pay any dividends at the current time. And it's a similar story to share buybacks. If a company is growing very fast, it needs cash to support such growth, to make acquisitions or to pay back debt and so on. And spending it on dividends would just hurt the company. So for a fast-growing company, it is actually wise not to pay dividends. Price to earnings ratio is 57.4. That is very, very high. So it seems that Adyen is expensive at the moment. But to properly value it, we will have to estimate the growth of Adyen for the next 10 years, and we will make 3 scenarios of this growth. So in the low scenario, we will estimate a growth of 10% for the first 5 years and then 8%. In the medium, 12% and then 10%. And in the high scenario, 18% for the first 5 years and then 15% growth. Now, why did I use such estimates? Well, if we look at the annual growth rate since the IPO, we see that the revenue went up by 50%, free cash flow by 48%, and earnings per share by 40%. So we could use such numbers, but that may not be very realistic because payment processing market is projected to grow at an annual rate of 9.1% in the next few years. So the low scenario predicts that they will grow with the market. Medium predicts that they will outperform the market by some margin, and the high one predicts that they will continue to grow twice as fast as the market. Still substantially slower than in the last few years, but I prefer to be too conservative than too optimistic. I may miss a good opportunity, but I have a smaller chance of getting myself into any serious trouble. And with such estimates, the intrinsic value in the low scenario is $16, in the medium scenario $18, and in the high scenario $26. But we are not finished yet because we should apply a margin of safety. I use a 30% one, and that gives me enough room for mistakes. So with such a margin, we get in the low scenario $11, in the medium $13, and in the high one $18. And the current price is around $11. So it is almost all in the green. Adyen seems very nicely priced at the current time. So there are a lot of nice things about this company. It is fairly valued or even a bit on the cheap side. They have no debt, they are growing fast, but unfortunately they have a serious problem with competitors. It shows in the profit margins and a slowdown of growth in 2023. They just don't have a durable competitive advantage that Warren Buffett calls a moat. It may be a good investment, but unfortunately for me, it is too early. It just looks too risky. But write me in the comments what is your take on this company. Can they make the most of the growth opportunity, or will the big players just crush them? If you enjoyed this video, you may want to check out my analysis of PayPal by clicking over here. Thank you so much for watching, and see you in the next one.